Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at the S&P 500 chart. We are not doing that very often on this channel, but I believe the S&P 500 is at a very important pivot, at a key spot. So I think everybody should be aware of the latest developments. Let's go. Okay, we are on our website, dailymarketupdate.com. Here you can see the website overview, our dashboard. You can register on our website and you can do it completely for free. If you do that, you can get access to all of these Elliott wave updates, including the cryptocurrency charts, stock charts, for example. Also, make sure that you follow us on our new The Market Intel Instagram channel. It's a new one. You can find the link in the video description as well. Now let us take a look at the S&P 500. What we're dealing with here is the 4-day time frame, 4-day chart, and the shorter time frame, the 8-hour chart. I would say let's take a look at the larger time frame first. Now I don't cover the S&P 500 very often here on this channel, but obviously there was in April a support area that was reached, a trading area that you know about if you follow our updates here on the website. At the moment the price is rallying into resistance at around $6,166. Now, this is very important, this $6,166 level, because it is the previous swing high from early 2025. And it looks as if in the very short term, we should see a move down in wave C, in which we could potentially test this area once more of around $4,760 to $4,988. Now, to be clear, this ABC structure that you see here in magenta is currently the preferred interpretation. So the idea is that we are likely going to see a flat correction unfold, an ABC structure highlighted here in magenta, which could then lead to a fifth wave to the upside in light green. That means in the short term, the risk is quite high because we're now rallying into resistance. Yeah, we don't have a confirmed top yet, but we are in resistance and could start that C wave to the downside. With a probability of 70%, we would expect the market not to break below our trading area there, not to break below the $4,763 level, but rather give us an upside reversal from that area. However, there is the chance, and we assign only a 30% likelihood to that the market forms a lower low and is already in a larger degree fourth wave correction. Then we need to focus on this area here around 3,400 to 4,050. Let us take a look at the 8-hour time frame. It's the shorter time frame chart, and it shows you that we are deep in resistance. Now, it is important to understand when we have a structure like that, like here, the ABC structure in magenta wave A, and again, the market reacted here nicely to one of the trading areas, then if it's a 3-wave move down, that A wave, technically speaking, the B wave, which is unfolding right now, most likely, can overshoot. It can easily overshoot. So there is still some room. It could even break above the previous swing highs here, at $6,166. We go much higher, the probabilities will increase that we are in another upside extension, that we already completed this fourth wave, and it takes us directly to maybe 6,500 plus. But that is not expected at this point. While I think we recognize that the market could go a little higher, just like a fake out, which is typically a B wave, and then go down in the C wave, we just need to be prepared for maybe short-term higher prices before we start that C wave. Now, what would be like the key support levels? What are the levels that need to be broken to the downside to give us a first indication a local top is in? At the moment, the market is still grinding higher, and that rally from the April low has been quite substantial. So it takes a break below 5,836 for a first indication of a top, then 5,528 for better confirmation, and then obviously we have a 5,127 level that could act as some support, but we're then already nearly in the trading area anyway. So that means the earliest signal we could get is a break below 5,836, and at the moment we're testing here the previous swing high. Now when you watch the video it might already be broken. There is quite a bit of volatility at the moment, but overall the situation hasn't changed for quite some time. That rally from the April low is still unfolding, but we have reason to believe this is kind of the last step, the last leg up before that C wave down should start. Yeah, that's the update on the S&P 500. I hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure to register on the website, and also don't forget to join our free or new Instagram channel, The Market Intel. Thanks so much. Bye-bye.